FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and today is March 6, 2020. Well, hey, we made it through this week, amazingly enough. A lot of ups and downs in the markets, for sure. And you have to wonder about the stability of the underlying system. How did we get to this point? Well, we're going to talk about that. First, as always, give us your opinion. Let us know what you think. How did the world, the global economic system find its way to the sorry state that it's in today? Well, certainly when you think about that, you got to think about Deutsche Bank. We know that Deutsche Bank for many years has been hanging by a thread. They just won't let it die. And, well, the Federal Reserve, who knows how they've bailed it out. The German government, it's the kind of bank that it's too big to fail, but it's really too far gone to save. Well, David Enrich has written a book, and if you're not familiar, David, you are finance editor at the New York Times, previously financial enterprise editor of the Wall Street Journal, and you've written a book called Dark Towers, Deutsche Bank, Donald Trump, and an Epic Trail of Destruction, and appreciate your coming on. So when you say an epic tale of destruction, what destruction has Deutsche Bank caused?
What destruction has Deutsche Bank not caused? I think would be an easier question to answer. No, I mean, Deutsche Bank is 150 years old. It was founded in 1870, and one of the first most memorable things it did was in the 1930s, where it was the bank of choice for the Nazis. And so this begins a tale of destruction, and it financed concentration camps, it financed the manufacture of poison gas, it financed the sale of gold that the Nazis extracted from the teeth of Jews, and so it was basically synonymous with the Nazi war machine in the 30s and 40s, and from there it is much more recently. It has become, I think, the global face of financial recklessness and criminality in the past probably 15 years or so. And more or less every major financial scandal that has rocked the banking industry during that period, Deutsche Bank has been either at or near the center of it, whether that is manipulating markets or rigging interest rates or laundering money for Russians and many others, or bribing public officials, or violating international sanctions, or evading taxes, or tricking customers, or lying to regulators, on and on the list goes. And so this is a bank that was so hungry for short-term profits that it was really blinded to just about everything else, and it did not operate it's about as far from operating in a safe and sound manner as you can possibly get as a major global financial institution.
All right. So we go back to what you first started talking about, its role in the financing of Nazi Germany. And look, they didn't really have any choice there. Obviously, they could shut down their doors and basically get executed. Believe me, I'm not making excuses for them, but they were part of the whole thing, right? Were they indispensable to the rise of Nazism? Probably so, right?
I don't know if they're indispensable to the rise of Nazism. They certainly, I think the Holocaust and World War II probably would have happened absent Deutsche Bank, but they were certainly enabled the Nazis to execute their plans with greater efficiency and speed. And you're right, if you look at most big German companies at the time, they either were shut down or they were participants in the Nazi machine. But Deutsche Bank took things a little bit further than most of them. And in any case I don't think there's any point in anyone sanitizing the basic fact, which is that this is a bank that was party to genocide. And both the bank and its leaders at the time were accused of, and in some cases convicted of, being war criminals. And there were a lot of people at the end of World War II, including the U.S. government, that argued that Deutsche Bank should have been the end. It should have been liquidated, put out of business. and end of story. And that didn't happen for a variety of reasons, including that some governments, including the British government, were really eager for Germany still owed reparations for World War I. And the British were convinced that absent a major German bank helping Germany recover from the war, that the odds of getting the reparations paid back from World War I were basically nil. And look, Deutsche Bank after the war, and I think in its defense, played a very active leading role in the reconstruction and reunification of Europe. And so that is, they've apologized repeatedly for the role they played in the Holocaust. And that doesn't make it better, but at least, they have owned up to their moral and legal responsibility for the crimes that took place during that era.
Yeah, and like you said, it's every German company, some of them that we to this day hold near and dear, like Mercedes-Benz, like Bayer, like BASF. I mean, you could just go down the list.
That's exactly right.
So, it's kind of.
But here's the difference, though. Yeah. The difference is that most of those companies that you look at now, there are probably some exceptions, but most of those companies have reinvented themselves largely as fairly benign companies that have, I think, prioritized adhering to the rule of law and adopting a much more conservative posture. I think informed in part by the shame and the lessons that they learned after having been party to genocide. And Deutsche Bank, I think, internalized those lessons for a number of decades, but really lost sight of that starting in the mid-1990s. And I think that is one of the things that makes it relevant and fair to unearth the Nazi past, even though that is, 70 years ago, 80 years ago now. And the fact that Deutsche Bank has returned to this path of criminality and recklessness and immorality and just being out of control, I think that it's fair to ask at what point did they forget the lessons that they had previously learned?
Yeah, that's a good question. I mean, I'm looking at the list of companies that aided and abetted Nazi Germany. There's a lot of American companies, British companies, Barclays Bank, IBM, General Motors. The list is pretty long.
Well, so I don't want to. There's no need to litigate this, but Deutsche Bank was an integral part of the Nazi war machine that really distinguishes itself from most German companies, and certainly any company outside of Germany. And there are lots of companies that did things that were improper and I think reprehensible, but Deutsche Bank, it deserves to be on a pretty kind of in a pretty small group of companies that were really deeply involved in this.
Yeah, well, like we said, they didn't have any choice, but they openly embraced it a bit. Perhaps it's hard to just assign because, while they might have financed it, they didn't actually make the bombs or the gas vans or build them. So, but let's move on to current times. So they've been hanging by a thread, losing money for over a decade now. They really were at the heart of the financial collapse of 08. 07 through 09, it really started in 07. And what kind of role did they play there?
FSN Radio. It's all about what's next.
OCNO Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. OCNO's district-scale land package is situated near 2 producing gold mines, one of which OCNO's management team previously developed and sold to B2 Gold. OCNO's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. OCNO has a tight share structure, and with its current treasury, it can self-fund the advancement of its gold discovery into at least 2022. This is an exploration company with drills turning that you'll definitely want to pay attention to. OCNO trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to OCNOresources.com. That's OCNOresources.com.
The Financial Survival Network. It's all about what's next.
Well, in fact, Deutsche Bank had enjoyed a relatively good crisis compared to most of the Western financial system. And that's in large part because some of the bank's traders had placed these huge bets anticipating and profiting from the collapse of the U.S. housing market. And some of this has become kind of immortalized in Hollywood at this point. And Greg Lippmann, who is the trader who is probably most responsible for the big short on the U.S. housing market, is the inspiration for the character played by Ryan Gosling in the Big Short movie. Mm-hmm. And the Deutsche Bank it lost a lot of money during the crisis, but its losses were pretty tame compared to what a bunch of the other big banks faced. And that, at the time, seemed to be this wonderful victory and kind of a blessing for Deutsche Bank. Ultimately, it didn't take very long for that to turn into a curse, because Deutsche Bank misinterpreted its success during the crisis as being a reflection of skill rather than what it was, luck. And they proceeded to squander this opportunity they had to use this position of relative strength in the industry to really fortify themselves. And whether that meant increasing their capital from shareholders or using their money to get rid of all of these toxic, unwanted, and pretty dangerous assets that were polluting its balance sheet, or investing in upgrading their technology systems, which were and remain such a colossal mess that it's almost impossible to get a full, accurate view of Deutsche Bank's underlying finances. And instead, Deutsche Bank did none of those things. And with the direct backing of the Federal Reserve and the implicit backing of the German government, the bank just plowed further into these reckless, but very profitable in the short term markets, and seemed to have, it just went deeper down a very destructive path, thinking that they had so skillfully skated through the crisis, when in reality they were the beneficiaries of a couple of very good bets, but that said nothing about the overall strength or savvy of the management team, or the strength and solidity and integrity of their balance sheet and their underlying finances.
Right. So in the movie, The Big Short, they're shown as buying back all of these derivatives that they sold to the players there to help make them into billionaires effectively. And then they realized, perhaps a little too late, that it was time to cover their bets. And then, of course, they were the beneficiary, them and Goldman Sachs, of the bailout of AIG. It was kind of an indirect bailout of Deutsche, right?
Yeah. Well, yeah. I mean, Deutsche Bank executives, especially at the time, but even to this day, some of them love to boast that they were, as a result of their savvy management, that Deutsche Bank was one of the few major global banks not to receive a bailout from a direct bailout from governments. And that is technically, literally true, but it's highly misleading, right? I mean, they, first of all, borrowed huge amounts of money at it basically for free from the Federal Reserve. Second of all, as you just mentioned, some of their biggest counterparties were bailed out, whether that was AIG or Bear Stearns, and as well as banks all over Europe. And third, and I think this is kind of intangible, but really important, Deutsche Bank is such an important company in Germany that there was never any doubt, and there remains no doubt, that if Deutsche Bank were to get in serious trouble, the German government is not going to let it collapse. They will come to its rescue, and the terms of that rescue are, I don't know, basically impossible to predict. But there's no way Germany is going to let its flagship financial institution, and in fact, one of its most important companies, just disintegrate. And I think the company and its investors have benefited from that. But it really is the definition of too big to fail and the moral hazard that creates, because it's allowed the executives of the bank for many years to act essentially with impunity, because they know that no matter how big their losses are and how reckless their actions are, someone in Frankfurt or Berlin is going to ride to the rescue at the last minute if needed.
Yeah, it's kind of like the Merkel put. We have the Greenspan put, which has turned into Bernanke put, which turned into, go down to the Powell put now. And we know that...
You forgot Yellen.
Yeah, I forgot Yellen. I just couldn't remember her name for a second. I don't know why. It's just so funny when you think about it, because they're all betting on this. And it's somebody once described it as the Dukes of Moral Hazard, because they know they're going to be bailed out, they don't have to act responsibly. And when you I mean, I don't mean to laugh about it because, it's really not funny, but it's funny when you think about it that you can effectively immunize people who are just doing the worst possible things. You can effectively immunize them from the results. So it's effectively you're socializing the losses and you're privatizing the profits, because while it's going, right, while this thing works before it blows up, it's wonderful. Profits are skyrocketing. Everything is great. Everybody's high-fiving. What I didn't mention, I used to work in Lower Manhattan, had an office in Hanover Square, and I used to park in the same parking lot as all the guys from Deutsche Bank. And while the financial crisis was going on, before that, they're like masters of the universe, heads held up high, and they're, leaving the place in their Lamborghinis, their Porsches, and all that. And then the financial crisis hit, and their heads are hung low. They're like a real schlubby lot once the crisis hit, because they knew that they had facilitated it and they were at the bottom of it.
Mm-hmm. I mean, the interesting thing about banking in general, and you mentioned moral hazard created by central banks and governments, but that's definitely true. But the moral hazard exists in this kind of micro level too within these banks. Because if you're a trader on, a bond trader, or any kind of trader really, or salesman, your compensation, especially pre-crisis, but to a certain extent still, was derived not from some preset formula or some or on the basis of the profitability of the overall institution or even the profitability of your overall department. It was based often as a percentage of the profits you personally or your small trading desk made. And so that created obviously a very powerful incentive to maximize the profits that you yourself are making or that your small cluster of traders and salesmen are making. The problem with that, though, is that it's completely asymmetrical. So if your group makes $1 million, maybe you get $100,000 of that, which is great. But if you lose $1 million or your group loses $1 million, you don't lose $100,000. The worst case scenario, the absolute worst case scenario, is you lose your job, and Wall Street has very short memories, and so you get hired somewhere else. There's basically no downside to shooting for the moon, and that obviously creates a very reckless culture where there's a very powerful incentive to take huge risks, and there's really no downside if those risks don't pan out. The losses are borne by either the investors in the company or ultimately by taxpayers if there's a bailout.
Yeah, so we've got very skewed incentives that have effectively led to very irresponsible behavior. So what's the relationship with Deutsche Bank and Trump? What's up with that?
Well, I don't even know where to begin. I mean, Deutsche Bank has been the only mainstream bank consistently willing to do business with Trump for the better part of 2 decades. And it's the fruits of Deutsche Bank back in the mid-1990s deciding that it wanted to establish itself, kind of get away from the reputation of being this somewhat provincial German and European lender, and it wanted to really increase its profits. And the best way to do that at the time was to get big in the city of London and on Wall Street. And so Deutsche Bank arrives in the U.S. in the late 1990s in a big way, and they need to find clients who are not already banked by the more established large U.S. banks. And Donald Trump at the time was a casino developer for the most part who had repeatedly defaulted on his debts, and his companies have repeatedly declared bankruptcy. And that obviously does not make you a very attractive target or an attractive client for banks, and they're not going to lend money very happily to someone who keeps defaulting on loans. But Deutsche Bank was so desperate to kind of establish a foothold in the U.S. that it was willing to take on that risk. And so this was the dawn of what would become a very long and quite lucrative and quite tumultuous relationship between Deutsche Bank and Trump, with Deutsche Bank ultimately dispensing something in the neighborhood of $2 billion in credit to Trump over those 20 years, and at a time when he was completely off limits to the mainstream financial system. And and Trump on a number of occasions defaulted on his debts to Deutsche Bank, and which you would think would be kind of a relationship killer, but instead a different wing of Deutsche Bank would just come back for more. And again, it's a reflection of inside the bank people were incentivized to make money for themselves or maybe for their very small kind of divisions or units. And they really didn't care about the overall health of their bank, and they did not care about the reputations or risks associated, the long-term reputational risks or financial risks even of doing business with people that had very bad credit histories, in this case, Trump.
Yeah. Well, that's, I guess they charge higher interest and, you
would think, but they didn't. Yeah. I mean, they were so eager to establish relationships with Trump. And what they did is charge big fees, but the interest rates, especially recently, that the bank has been charging Trump on and more than $300 million of loans that he's taken out in the several years preceding his presidential campaign, were quite low. I mean, they were often in the 2% range. And that's as anyone who's ever tried to borrow money knows, that's extremely low. And it is especially low for a client who has this well-documented history of default. I mean, if you or I were to repeatedly default on loans, if you were ever going to be able to get a loan, which you probably wouldn't, it would be in the form of credit card loans, probably, that would come with interest rates well into the double digits. And, you'd really struggle to get a mortgage loan. And if you did, it would not be at a prime rate. It would be way above that. And Trump, because he had so much money to throw around and Deutsche Bank was so eager to establish itself in the U.S. market, really looked the other way and abandoned, really the prudence that you would expect of a major financial institution.
On the one hand, though, but most of his defaults dealt, if not all, dealt with the casinos in his real estate holdings.
That's not quite right. I mean, there's I would say most famous default it was in 2008 on a $640 million loan that Deutsche Bank had made to finance the construction of a huge skyscraper in downtown Chicago. And that was a 2005 loan. Trump defaulted in 2008 during the financial crisis and blamed Deutsche Bank for having caused the financial crisis and then of having engaged in predatory lending practices against him by trying to collect on the loan. And so, but you're right. I mean, historically, the bankruptcies and a lot of the defaults were in the casino business. But again, if you're a normal customer, whether you're a company or an individual, it doesn't really matter. At a certain point, the context stops mattering that much. What matters is that you have a track record of defaulting. And in Trump's case, and he was very open, and he's written this in a number of his books, that he took kind of pleasure in defaulting. He viewed the banks as suckers for continuing to throw money his way. And he viewed defaulting as a legitimate, normal kind of business operation, which, again, is fair enough. And the fact that he'd written that in books should have been fair warning to Deutsche Bank in advance that this was what they were dealing with. But again, the bank was so hungry for short-term profits that it just looked the other way over and over again. And it's not just with Trump, by the way. And this is, you're going to like Trump or hate Trump or whatever. To me, this is more important as a reflection of the rot that was going on in the finance industry than it is about whether or not whether or not Trump is a good president or a bad president. And you can look at another, I think in some ways a better example is Jeffrey Epstein, who I think everyone can agree is a pretty vile character. And
totally reprehensible.
And Epstein in 2008 was convicted of sex crimes, and he continued to have a bank relationship with JP Morgan at the time. And that lasted for about 4 or 5 years. And by 2012, 2013, it was kind of an open secret on Wall Street that Epstein was a predator and also was up to no good in his finances too. And so JP Morgan finally cut him off at the end of 2012, beginning of 2013. And Epstein is at that point faced with a choice between, or not really a choice, he needed to find another banking relationship to not only lend him money, but to manage his assets and to facilitate money moving between all of these different shell companies that he had constructed all over the world. And who does he go to? Deutsche Bank. And Deutsche Bank is once again just does not care about the reputation of the clients they're doing business with. And so it strikes up a very fruitful relationship with Epstein in which they're lending money to Epstein, they're managing his assets, and they're facilitating all of these transactions between different shell companies. And that relationship persisted between Deutsche Bank and Jeffrey Epstein until last spring or early summer. And so to me, that in some ways is that's a pretty powerful, regardless of where you are in the political spectrum, that is a pretty powerful indictment of the bank's standards and the bank's judgment that they were willing to do business, extensive business, with Jeffrey Epstein at a time when no one else would.
Yeah, they truly become the lender of last resort to these nefarious types, don't they? And this isn't the only thing. I mean, they've been implicated in money laundering schemes. Their history of criminality goes way back here. I don't remember. I think there was some drug money laundering involved here.
There's all sorts of stuff like that. I mean, they were at a time when the U.S. had and other countries had very stiff sanctions on countries like Libya and Myanmar and Iran and Syria. Deutsche Bank was helping institutions, they're like government-linked institutions, move money around. I mean, Deutsche Bank has been accused by the families of a number of American soldiers who were killed in action in Iraq for being responsible for their deaths, because Deutsche Bank was either directly or indirectly providing financing to essentially Iranian terrorist groups. And so the consequences of this stuff are real. And there's a reason why Deutsche Bank keeps ending up in the middle of this stuff. And it's not just bad luck or just that everyone is doing it. It's that this is a bank that over and over again has made the decision that they are much more interested in pursuing short-term profits that enrich their employees and particularly the executives than they are in adhering to the rule of law or behaving in an ethical and moral way. And again, that's not, there's a lot of behavioral problems in the banking industry that have been exposed over the past decade or two. And I've been covering this stuff for a while too, and for almost 20 years now. And I really have not seen a bank as kind of systematically rotten a culture as a Deutsche Bank in my experience.
Well, HSBC could probably give them a run for their money. I mean, they financed the opium wars and all the other things.
HSBC has done some bad stuff for sure, but I can name a whole bunch of examples there. And really, Deutsche Bank has been at or near the center of just about every financial scandal, whether it's financing, doing money laundering, or violating sanctions for drug lords or terrorists or whatnot. And HSBC has been involved in some really shady stuff too, and has, I think, rightly been severely punished for that. And you can take a bank like Wells Fargo, which has been involved in some shady stuff and has been rightly punished, or UBS. And there's a whole long list of banks that have, virtually every major bank has gotten in some serious trouble over the past decade or two. But Deutsche Bank has gotten in more trouble more systematically than anyone else, in my opinion.
Hey, we didn't really trace back, we should just mention it, the way that Deutsche Bank got their foothold in the United States, actually in the trading and retail arm, was when I think they took over Bankers Trust, which was very staid company that had kind of gotten into the whole trading thing. And I think they got into a little bit of trouble, if I remember correctly. And Deutsche Bank,
they got in a lot of trouble. Yeah. I mean, there was, sorry, go ahead.
I'd say little trouble in terms of the way Wall Street works, you know?
FSN Radio. It's all about what's next.
Today's show is brought to you by U.S. Gold Corp. U.S. Gold Corp is a U.S.-focused gold exploration and development company advancing high-potential projects in Wyoming and Nevada. U.S. Gold Corp has consolidated a district on Nevada's productive Cortex Trend and is advancing the Copper King project towards production in Wyoming, led by a team of prolific company builders and renowned explorers, including Dave Mathewson, who is directly responsible for several major Nevada gold discoveries. U.S. Gold Corp is well-capitalized and has an extremely tight share structure with less than 20 million shares outstanding and trades on the NASDAQ, a major exchange, under the ticker symbol USAU. To learn more, go to usgoldcorp.gold. That's usgoldcorp.gold.
The Financial Survival Network. It's all about what's next.
The irony here is that, and in recent years, it's the Federal Reserve that's been really breathing down Deutsche Bank's neck, probably more aggressively than most other regulators. And the irony here is that a lot of the trouble that Deutsche Bank is now facing stems from this fateful acquisition at the end of the 1990s of Bankers Trust, which was kind of this third-rate Wall Street. It had been this trustee servant for wealthy clients, and it had refashioned itself as this Wall Street juggernaut and doing a lot of business in emerging markets and a lot of derivatives trading and stuff like that. and over again through the 1990s had gotten in serious trouble for whether it was ripping off its clients or just operating in a destabilizing manner. And it was the Federal Reserve at the end of the 1990s that kind of brokered this marriage between Deutsche Bank and Bankers Trust, because the Fed was worried that they were going to have to bail out Bankers Trust. And they saw this big German institution that was willing to essentially take the problem away and, take it off of the Americans' hands. And so the Fed left at that opportunity. And the irony is that even though the Fed encouraged this marriage and this acquisition, and now 20 years later is stuck in the position of having, just continuing to having inherited the mess that they created.
Yeah. And I remember that Bankers Trust's slogan was, "You have a friend at Bankers Trust." So
that's interesting.
Yeah. I mean, this is a long time ago. So really interesting book. And if you haven't heard about it, I suggest you go take a look at it. Read it now. Dark Towers, and really sounds like a lot of research, a lot of documentation went into this, David, and we're thrilled that you shared it with us. Dark Towers, Deutsche Bank, Donald Trump, and an Epic Tale of Destruction by David Enrich, and really great research there. We appreciate your sharing it with us. Hey, questions or comments for David or myself, why don't you email us, kl@kerrylutz.com. Twitter feed is @KerryLutz. Facebook page is Financial Survival Network. And of course, our home site is financialsurvivalnetwork.com, and you should sign up for your free subscription. David, really appreciate you coming on. Thank you so much.
Thanks for having me.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.